Hello, I'm Grace. Expectations of a US-Iran agreement are driving a sharp decline in global oil prices. Brent crude fell more than 3%, hitting its lowest level since March. Market reaction was highly sensitive. The steep weekly drop, exceeding 6%, reflected how quickly peace expectations were priced in. The U.S. Energy Secretary stated that half of the oil transport through the Strait of Hormuz has been restored. This implies the normalization of 7 million barrels per day in supply. This volume accounts for roughly 7% of global daily oil demand. It is a massive amount that could decisively resolve supply disruptions. The key driver of market sentiment was the presentation of concrete figures. Although no formal agreement text exists yet, the Secretary's remarks enhanced credibility. The figure of 7 million barrels was viewed not as mere speculation, but as a realistic signal of supply recovery. This news is expected to serve as an important variable for the Korean economy. It could become a turning point that reduces cost burdens amid the pressure of high interest rates, high exchange rates, and high prices. Stabilizing import prices may somewhat alleviate household spending burdens. Expectations of reduced manufacturing costs are also positive for economic recovery. Industries with high energy cost shares, such as chemicals and steel, will benefit first. Corporate margin improvement expectations are bound to rise. However, uncertainty remains as the agreement is not fully realized. Volatility persists, with market sentiment hinging on the resumption of traffic through the Strait of Hormuz. If actual transport volumes do not hold as expected, oil prices could rise again. This is why a cautious approach seems necessary rather than excessive optimism. Price indicators have a time lag and cannot be reflected immediately. However, reduced oil import costs will positively impact quarterly corporate earnings. Gas station prices reflect tax policies and market competition with delays. Nevertheless, a decline in overall transportation costs is highly likely. Uncertainty remains regarding the implementation of the agreement. Investors should remain cautious of short-term volatility and respond carefully. If the drop in international oil prices eases inflationary pressure, it could widen room for financial policy. It is expected to serve as a catalyst for economic recovery. We will continue to monitor market trends and provide accurate information. We will meet again next week with an update on oil price trends. I'm Grace, thanks for watching.